All right, everybody. Good morning. Good morning. Let's get a sound check real quick to make sure y'all can hear me. Órale, güey. Buenos dias. The market seems poised to pounce. It is waiting on an excuse. Don't know what is on the agenda that is making everything so sketchy, but this market really is holding its breath for something. Tried looking around this morning, and all of the normal morning briefings or morning emails or anything like that is pointing out the same thing that we've already had on the table. Energy is dumping. Nations around the world are continuing to raise rates. I mean, there's nothing new. What we've got on the wall of worry has been there. China did back away a little more on their COVID zero policy, more lessening to their stance. A lot of nations are still expecting China to fully open next year. Looks like around May. The consensus is that a lot of those China names will rip hard to the upside, but it'll be a short-lived run is what the consensus is right now. And of course, until they actually do come out with cement COVID policy, there's liable to be that rug pull from time to time. We have a very small list of economic events. We do not have any Fed speakers today because they're in quiet mode. You need to continue to watch out for any tweets from that Nick Stanos guy. He is what we call the Fed whisperer. When the Fed wants to leak something, they will run it through this guy and he'll put it on Twitter. It's the kind of world that we live in nowadays. Nick Tamaros. So in the quiet period, the Fed will speak through this guy. I haven't seen anything, and I have no reason to believe that we will, but you also want to keep your eye out for any speaking engagement from Janet Yellen. During a Fed quiet period, there's nobody out there talking. And so she can come out and talk, and she doesn't have to share the media with anybody. It's my own little paranoia, but she's got an agenda, and she's been trying to exercise that agenda for half a year now. We're getting into year end. Everything's nice and quiet. She absolutely has the ability to move the dollar. It wouldn't surprise me at all if we hear from Yellen in the next 10 days. So it just continue to, just kind of keep your eye out on any news that has anything to do with Yellen speaking somewhere. It's my own little paranoia. We did have this double top in the dollar, and we've continued to see the dollar moving this morning to the downside. And yet, as we're going to see here in a minute, looking at the S&P, we're not getting any of that follow through. It's like I mentioned yesterday, we are seeing a real disconnect between what's happening in the dollar and what's happening everywhere else. We can't continue to look at the dollar the way we have most of the year when we say, oh, well, the dollar's going up, the S&P is going to go down, or the dollar's going down, the S&P is going to go up. That is broken right now. And it normally isn't so tightly correlated anyways. That was just, you know, a boon that we enjoyed for a while, but can't count on something like that to stick for very long. This morning's just a really great example of that. We're expanding to the downside here. And when we go over and look at the S&P, we're not really going anywhere. US dollar Canada is not reflecting what's happening in energy yet. I mean, they're still positive on the day, which is oddly interesting. And the British pound and the euro FX pairs are still moving to the upside, of course, because the dollar is moving down, which makes the shorts on FXI and FXE, they're not, it's not FXI, but definitely FXE, another trade opportunity to use ETFs. Bum, bum, bum. Looking at the volume this morning, we're within boundaries. This looks like a market looking for an excuse. All right, so as you can see, there's really nothing on the docket. We do have an auction at 11 o'clock, and that's it. This is, looking at the econ, this is a really good day to do a 0-day trade. Just from the lack of econ, it doesn't mean we're, you know, you're going to want to run out and put one on just because of that. But once we get past the 11 o'clock auction, smooth sailing into the afternoon with no interruptions other than what could come through the news. We've got a 1.8% ADR. And at the moment, we are in an MDP. I know this is a really cluttered chart. I was looking at my moving averages this morning. Missed daily pivot, MDP. We are underneath the 10-period exponential moving average. We are holding above the 100-week, but just barely. We interacted with the 100-week yesterday, and we're still tangled up in it this morning. And we are tangled up also with the 4-week. 20 is a long ways off, but if we continue our move to the downside today, that 20 EMA is going to be on the docket as a target, 39.77. We are underneath the 200-period EMA. If we make a break to the upside, 40.26, we're going to hit our head on it. We're surrounded by moving averages at the moment. And the more we cross through them, the less effective they are. But first touch, we come into contact with that moving average, we're very likely going to take a rejection off of it. We broke through the 50-week yesterday. And we broke through the weekly pivot point yesterday. All right, so we've got a lot of big moving averages all tangled up within our price action. So this morning we've got a really narrow range. Globex high 40.14, Globex low 39.95. Well, that sounds like a price tag. We've managed to cross through the close often enough that that has no value to us anymore. But that's at 4005. It's interesting that we closed there. It was a major level. With a narrow IB like this, it implies that there's still a lot of work to do. And the lack of volume and the lack of flow suggests that the market really is waiting on something. We don't know what that something is, but it's going to throw up its hands and just pick a direction at some point. We do still have major econ on Friday, but Friday's a long ways off, and I can't expect this market to stay like this for the next 4 days. So it's unlikely that that's the issue. There's obviously something else going on. The ADR to the downside, or pivots, we'll just focus on those. Yesterday's low, 39.87. Then we have that 20 EMA at 39.77. ADR half, 39.69. One of my levels, 39.65. And then the previous week's low, 39.40. And then the full ADR at 39.32. And as far away as that may seem, I'm not reaching here. That is well within our boundaries. We can easily make that distance. And it wouldn't even be considered an outside move. That would just be a normal everyday run-of-the-mill move. So 39.32 is well within our reach. Moving in the other direction, we've got our Globex high at 40.15, which is really close to the cog line, right? Which is another level that we're tangled up in, is the 40.11 cog. Then we've got the daily pivot at 40.23, the 200 period EMA at 40.26, and then the weekly pivot 40.40, ADR half 40.42. The cash open of yesterday at 40.45, and the 50-week EMA at 40.47. Yesterday's high at 40.75, and then the entire ADR at 40.79. And again, that's not reaching. We can easily go to 40.79 today. So either one of those two ADR levels are within our boundaries. That big. That's our day's range today. And we could move all of that. Honestly, we could hit both sides of that, and it still wouldn't even be considered extreme. It would just be violent. As for which direction it's going to go, there is nothing out this morning giving us any indication or any bias, which is why we play the pivots, right? We use the goalposts, set our levels, and whichever direction we break, then we just start targeting the next level. One thing you can do when you have a range is measure it. And then plot that measurement out as a projection. It's what we do with head and shoulders. It's what we do with wedges and everything else. You can do the same thing with ranges. And you'll end up with something a little bit like this. And that will give you your levels for a top side breakout and or a bottom side breakout. So we talked about being in an inside week. For a couple of weeks, we were in an IX10 pattern. And last week, we broke out of that box. Well, it has failed. Now, just because it failed doesn't mean that necessarily that we're going down. We were in an IX10 back here, and we broke out of it and then stalled, and then we kept it and continued to move higher. So, right, just the fact that we're outside, or that we were outside and we're now back in the box, does not mean we're going down, but it does mean that we're back where we were with no pattern setup opportunity, nothing to look forward to. We need a market that's actually doing something, going somewhere, and we're not going anywhere. We're still inside the same place we were 3 weeks ago. So I know people are getting antsy. They want answers. They want direction. They want a trade. They want to get some money into the market and take some swings. This is showing that there is nothing out there, right? Which on the indexes is saying there's no directional trade yet. But in names, equity, and companies, there's plenty of trades going on out there. We focus a lot on the indexes, but if you were to go through actual companies and start looking around, there is plenty of opportunities. Just the indexes, like the S&P, are range bound and not doing anything for us right now. So you got to find a little bit of patience, and it should be proceeded with a lot of caution, because we've got some serious econ on deck over the next 10 days. There's no reason to get into a trade right before that econ in a swing trade. 10-day, 30-minute volume profile. This is a really nasty profile. We're supposed to have a shape like a capital letter D, a capital letter B, or a P, even a lowercase b. And instead, we have this comb shape where we've got these volume shelves. So any move to the upside is likely to get tangled around the cog line 4030. We're nearly at the 4011 cog line. A break below our low of yesterday happens to land inside of an air pocket, so don't expect much help from yesterday's low. We're likely to break through it and just keep on going down to the cog line at 3960. And then we'd be back to the bottom of the box, 3943. We had a VPOC. We've already hit it and punched through it a few times, so it's no longer a VPOC. I'm going to keep it in play this morning. I'm not going to take it off. Normally, I at the end of the day, right, if we've punched through one, I take it off at the end of the day. I'm going to leave it on for right now. So that VPOC is 39.97. It's a carry forward from yesterday's point of control. And the VPOC that we have at 39.61, I just want to point out how much volume there is down here at that 39.61 area, so that when we go back to that 39.61 area, that's where our point of control is on this 10-day. And it makes sense because we have all of this back here, and then we have all of this right here. So 39.60 is very likely going to be a bounce play first touch. Good 10 or 12 points. We are soon going to get a cross up in healthcare on a 50-20. Consumer staples, it's moving in that direction. We haven't yet crossed up. It's not destined, but healthcare is destined. Even if the market was to crash and burn today, healthcare is very likely going to cross that 5,200. It's like moving an ocean tanker. It won't turn fast enough to not cross. Same thing with industrials. It's not crossed yet, but it's almost destined to cross at this point. Energy is taking a significant beat down, so we might actually get a 5,200 cross down. It isn't turned yet, but it's very likely to if we continue to trend in the direction we are. And financials, not crossed yet, but moving in the right direction. This one's not destined yet the way that XLI is or XLV. Those two are almost guaranteed to cross really soon. Every single sector we have is down. Some formed that double top or that cup pattern that we talked about recently, and then it failed. But everything kept its range. Nothing has continued to expand since last week. There is no capital rotation. And as someone much smarter than me has said many times before, if we don't rotate, we will get volatility. So you're going to get one or the other, right? Either capital rotates through the way that it's supposed to, or you just get a whole lot of volatility until we do get that rotation. We do have a rising wedge in the indexes in the S&P. Rising wedges break to the downside. We can measure that move out. Let's take it over to the SPX. It's got a little bit of a cleaner wedge. There's your rising wedge. In technical analysis with a rising wedge, you measure back here or the widest spot, and then wherever we break, you project that to the downside, and that will be your target. Easiest way to do it is just to use your drawing line. And then take it and grab it, move it to the break point. At the moment, should we break to the downside out of this wedge, the first target would be half of this distance, and the full target would be 3660. A little trick, you want to find out where the middle of your line is, turn the label on. It's not perfect, but it's close enough. $38.14 and 36.60 is the downside breakout of that rising wedge. Now, the thing about a rising wedge is that sometimes it breaks to the upside first to trap a lot of traders, and then it rolls over. It's a capitulation top breakout, right? So it's really steep, and then it dumps. And it's designed to trap a bunch of bulls that are jumping in, believing that we're getting a topside breakout. it'll be like a blow off top if you want to search online for what that would look like. Rising wedge with a blow off top. We are below one of the benchmarks that I've been using, which is 50% of the candle from yesterday or from last week, that big green candle. $39.05 is going to be a magnet today. Just like 40.05 was yesterday. So if we break to the downside, that's the goal. And the 50% mark is 40.18. All right, so as you can see yesterday, crude or energy oil had a significant sell-off. And this is a great example when when we talk about energy going down and somebody will DM me or reach out and say, hey, you said energy was going to go down, but Chevron or Exxon Mobil or whatever didn't go down. Why not? Well, there's a difference between crude and stock energy names, right? So just because an energy company is out there doesn't mean that that energy company is going to go up or go down when we're talking about crude going up or down. The XLE ETF, for an example, has a lot more things in it than just crude. So if you want to track crude, you want to look up something like the WTI, and you can do that at stockcharts.com for free. You don't need an account there to do that. Or you can use something like the ETF USO. There's also a Brent crude ETF. There's a lot of ETFs out there for energy, for crude, for oil. So, just run a little search. They're not as liquid as USO, and USO might not be perfect, but with its liquidity, I would much rather use that than that Brent crude one that I mentioned. Either way, energy by itself, or I should say crude and oil by itself, is not going to immediately just disrupt Chevron and Exxon Mobil and Occidental and all of those. Not quote just because, right? There's got to be more to it than that. But we did get that break down yesterday, stabilized reasonably well until early this morning, and now it's continued that breakdown again. We were overextended, overbought, use whatever word you like, beyond the 4-period moving average. And now we went from one end to the other. We were above it, now we're below it, starting to stretch a bit beyond it. The dollar is flirting with that 4-period right now. The indexes are so narrow that we're looking at like a 20-point range in the S&P and about a 60-point range in the NASDAQ. And considering what we've had for most of the year, that's a really narrow range in both of those names. The VIX kind of stalled out, holding around that $20 level. The VIX is at a critical level. Let's take it to a bigger chart here for a minute. So we've been trending down since October, right? We had that S&P October low when we bounced and began to rally, and I called that so nicely, right? So we had the S&P rally, and that is the last hurrah of the VIX. It's been trending down nicely since then. We've gotten into some lows that we haven't seen since March, and nearly since January and February. And I mentioned yesterday, that'd be a real good time to buy the VIX, not necessarily because we want a hedge, because this year it's been just poop, right? For a hedge, this thing's been worthless. But as a trade, just to make money on a long opportunity, buying the VIX at $20 would be a pretty good idea, especially since I think we're heading to 30. Nicole said it much better than me this morning. Oil stocks focus on the forward price of oil and not the front end or the spot price like CL does. Also, stocks are a part of the stock market, right? And if it is affected by things going on in the stock market, as opposed to an oil futures product or even just crude itself, which is not necessarily in the stock market. And then you've got your commodities discussion and, run it on up the flagpole, but much more articulate than me this morning. Thank you, Nicole. I'm tired, guys. Y'all tired? I want this market to do something already. Like, just pick a direction, rip to the moon so we can ride it, like urban cowboys, or dump this thing into the dirt so we can ride that. Just do something. Poke it with a stick. Give it some coffee. Keep your eye on the VIX. If we get below $19 in the VIX, it's very likely that we're going to see a significant rally in the S&P and in the NASDAQ. But it's got to get there first, right? And we're not talking like, oh, it wicked down there. It needs to close definitively below $19. Yep, about 6 hours a day. Isn't that enough sleep for everybody? That's when I get to sleep in. I get 6 hours. We're moving away from that $19 level, so we're not understanding or not anticipating a break below $19, but I would still keep that benchmark in play. For now, it's much better than looking at the dollar. The dollar is not really helpful this morning, right? Like I pointed out earlier, the dollar has made a reasonably significant move this morning, and we're not seeing any reflection of that in the S&P and in the NASDAQ. If we want to take things in the other direction and have that kind of a conversation, if the VIX gets above 25, that's a long ways off, right? If we get above $25, we're very likely going to begin a new leg down in the S&P and the NASDAQ. Between where we are and $25, if the VIX continues to rise through that level, anywhere from 20 all the way up to $25, then we're just going to expect the S&P to not break out, but not break down. I think that's a significant thing to understand, right? Let's go back to the S&P for a minute. We're not crashing and burning here. We've had multiple days where we're just kind of gently fading back off of that really big move that we had. So we're not breaking out and running. We're not breaking down and crashing and burning either. If the VIX stays below 25, but stays above 20, I think the S&P and the NASDAQ are going to stay range bound. And we've got our range. We've had our range. It's been the same range since the first week of November. So VIX above 25, I think we break 3,900 and begin heading down. VIX below 19, I think we break above 4,100 and begin running to the upside. That is a definitive, useful correlation, right? Much better than what we're going to get out of the dollar right now. Taking it back to the dollar, I have a very strong quarterly level at 104.75. There's no real reason to try to split pennies here. Just call it 104.5. The dollar needs to maintain above that. There is still a correlation. It's just not as tight as it was. If we get below 105, we've got 103.46. That needs to hold, or the dollar is no longer going to be considered in an uptrend. And I mean, at this point, you would almost have to choke on the words to say that it even still is in an uptrend, but it is. It's still holding the breakout. So technically, it's still in an uptrend. When I measure trend personally, and I put a fib on, it should not pull back farther than 786. I know the textbooks say 618, but the textbooks were written when you couldn't share data on a microsecond like we can now, and was using day-old data and hour-old data. So if you wanted to use the 786 benchmark that I use, this trend is dead already. If you use the textbook definition of 618, well, the month isn't over yet. The candle is still alive, and we're still holding above, or we're right at that 618. So splitting hairs, but it's right there. A wink and a nod, push it one direction, and that's a wrap. We are also forming a head and shoulders, a very large head and shoulders. We've got the left shoulder, we've got the head. We're looking for the right shoulder, and then we're going to measure that break line, that neckline, and we're going to plot that projection to the downside, which very likely will put us back below $90. But it's a weekly head and shoulders. It will take months for all of that to unfold. Right? So we don't look at that as like, oh, we're going down today. Even the suggestion that it is a head and shoulders would imply that we have to go back up again to get that right shoulder. So it's not a straight shot to the downside. With the fall in the dollar, names like FXE should continue to fall, right? This will be an inverse correlation to euro dollar. If it's euro / dollar and dollar is falling, that's going to make the euro side go up. This thing runs inverse of that pair. So if the euro dollar is moving up, this should go down. Nope. It's a good thing we looked. Every one of these ETFs seem to play it the other direction. So FXI and FXY would go opposite. This one's going in the same direction. Bottomed on that 10-3, rallied up just like the FX pair. So as long as we expect the FX pair to continue to go to the upside, we're going to expect FXE to go to the upside. We are going to expect Euro Japan to go down. And with that, we could play FXY. And as you can see, this one is inverted. So we bottomed in October and started to run, or we topped out in the pair and started to fall, whichever one you're playing. I don't really use, or I don't really trade FX pairs. I would much rather trade the ETFs. I don't think I'm alone in that. I think a lot of people would just rather use the broker they have and trade the ETF. So since US dollar is the first part of this pair, if the dollar continues to fall, this pair is going to continue to fall. And so this ETF, the FXY, going to continue to make that upside move. So you've got FXE continuing that upside move, and FXY, and then FXI is the China one. So that would be US dollar China. And again, you can see where we topped out here in the pair and where we bottomed out really close here. It helps if I put them on the same time frame. Bottomed and then bounced, topped and then fell. That's a gappy bugger. Better off playing it on a weekly. Looking at these and even focused on trying to trade something like these is a way to get out of what everybody else is focused on, right? Apple, Microsoft, Tesla, Amazon, it's so crowded in there right now that it's just a chop fest. You could start looking at things, like bonds. They got that new TIP, and you still got your TLT. So maybe something like getting into maybe some commodities. And then of course, the precious metals or metals in general. I mentioned it the other day, but I'm going to continue to talk about it. Watch the financials right now, the financial ETF XLF. I like to use KRE. It's more regionally bank focused, but the financials are one of our three sectors that we watch, in a risk on situation. Yeah, tech, finance, consumer discretionary. And finance has got a large part of what we see going on, much more than tech. And what we've been seeing lately is finance versus tech instead of finance and tech working together. You could see yesterday when that breakdown really started to happen, it was around 11:30. It's when the FANGs, or the monsters of tech, or large market cap companies, it's when they finally broke rank and began joining the XLF or KRE, which was already sitting near those lows. It's when we really started to break down yesterday, right? It looked like we were going to hold the line and rally up, and then it just ran everybody over. Silvergate getting whacked this morning. Signet Jewelers is another one. Yeah, BABA moving around this morning. It's up a little bit, nice little gap up. And JP Morgan is up this morning, although it's starting to give it back. Natural gas is down. Black market, or not black market, BlackRock is down, and crude USO. Goldman Sachs is down. So a little bit of a disconnect in those financials. Let's jump back over there. All right, so JP Morgan took a pop to the upside, but it's giving it back. The peers that I watch with that, usually when I'm watching JP Morgan, I'll watch Bank of America and Wells Fargo with it. They didn't really take any love with that this morning. They just basically kept what they had. But if you look at the other pair group taking it the other direction, Morgan Stanley, Goldman Sachs, and Citigroup, they are definitely giving it away this morning, headed to the downside. More liquidity in Goldman Sachs than in the other two, but Citigroup is getting some liquidity behind it as well. Citi's still inside day, so I'd be looking for an inside day breakout in Citi below that 45.25. Goldman's already outside the box and headed to the downside, which might prime up for a nice trade setup. So with Goldman, let's take it back to a regular chart. This morning in Goldman, we're already down at 365. Let's split the mid and call it 366. So we're down here, 366 area. What we want to be looking for in Goldman is, since we're seeing other financials getting a little bit of love, if we were to rally back up and hit our head against resistance and then dump, right, that would allow us to jump in as we get into the open and get that little bit of a head fake. So look for, a bounce back up into that 369, 370 area, and then it flips over and dumps to the downside, right? Kind of like what we saw back here, for an example, where it closed up off of the lows, fell back down, got a head fake, right? Or maybe there's a better one to show than that. But it'd be the same kind of logic right in here too, where we gapped down and was opening near or around that low, and it tried to rally up and then head fake. One thing that fits this argument or this discussion is when you have a market that's trending, right? A trending market doesn't just fall straight down. Trending market pulls back. So one thing that we often see in a trending market is it'll make the move, and then in the pre-market or in the after hours, you'll get that pullback. Then the next day, it'll continue to make that move, right? And so this could be just the continuation. We're still looking for that pullback though, before the next leg down. Speaking of that next leg down, once we do break this 365 area, we're still going to need a target, and 355 would be my target on that. Probably not in a day, but we could easily get there by the end of the week. And this is resolving the island pattern that we had. This is a gapped up island, right? We gapped here, and then we kept this island range, and now we've gapped back down. That is 100% an island pattern. Perfect form too. City back to 44 is not out of line. I don't think it's going to come very easy though. None of these plays are going to be an easy money play. if we're looking at the bigger picture and not just a very short-term, short-duration trade, step back into those weeklies and look at the double bottom on a lot of these names. That would be a great target for a swing trade. And if you can get into some of these while they're still near that high area, putting on a call credit spread up there would finance some puts to play this to the downside. That way, maybe it doesn't move fast enough for those puts to monetize, but at least you bottom with credit that you collected from the credit spread, and you don't end up losing money on the puts. You just don't make any money on your call spreads. Turns into, a little bit of a break even. Another thing that you could try to do if it prices well is to build a butterfly along those lows and kick it out to, say, January or March. February hasn't really been pricing well in a lot of the options that I've been looking at. I don't have any trades on for February, but Jan still has some good pricing, and March is where I've got like Apple and Microsoft. It's good liquidity in March. Building a butterfly that far out and this far down should give you an opportunity to get some crazy cheap stuff, right? I'm talking a couple of pennies. And then you can sleep at night, because what do you care? It's like 2 pennies. Who cares? You can't go to McDonald's and get coffee for $2 anymore. So really cheap butterflies, you throw them on there, maybe layer them out a little bit, different expirations, different strikes, and just flood the whole zone. Maybe put $20 in total, 20 pennies in some butterflies down there. If we continue to move to the downside and land into any of those, they're going to pay $75, $100 for what? For risking 2 pennies? Yeah, I like that. KWeb is up again this morning, 2%. This is our China ETF. So on the week, we pulled back yesterday, but we are already starting to rally back up. What we want to be watching for here is a lower high. We have the opportunity for that 1, 2, 3 failed play. It's a nice setup. Notice yesterday, we also had that really nice gap up, and then it just spent the morning dumping back down to where it closed. And then that's all we kept. That's all we had. Same thing back here, gapped up. As we came into the open, it closed that gap and then ran. Same thing, closed the gap and then really didn't do much. Never got it closed. I misspoke. Gap was way up here. It tried to close that gap. But it couldn't get it. So the fact that we're up this morning doesn't mean anything. Not by itself. A fade back to around $30 for a bounce like we had here. It faded back. We got the bounce, had the run. I don't trade KWeb, by the way. I just use it as a proxy for the China names. With KWeb up, we expect names like JD to be up, PDD, Baidu, Baba, even names like Neo. Ooh, yeah, Neo was, but it's given it back already pretty quick. So this is just a representation of the state-sponsored buying that's going on over there. All the state China banks were told, buy the China equities, continue to push them up. And then we've got the lowered COVID restrictions that are also providing a little bit of a boost into that. Just recognize it's basically the only thing out there this morning as a sector or an industry that's moving around. So we got the K-Web, we kind of established that already. FXI matches with China. It's kind of the discussion we were just having again. Gold and silver, which will go up when US dollar Japan goes down. It's a nice little inverse market relationship. Bonds still are doing really good this morning. For most of the year, stocks and bonds were basically moving together. You had downward moves in the SPX, right? We're off the highs in the SPX. We've been trending lower all year. Thanks, Captain Obvious. But we've been also getting beat down in bonds all year. So there's the SPX down off of its highs. You look at something like ZB, beaten down much worse. So here we are this morning getting a rally up in bonds. They're up more than 1% this morning. Let's take a look at the ZN, be the 10-year. Certainly looks a lot better than, say, the ES this morning, which is not getting that follow through. So where's the money flow? Where's the capital rotation? Into bonds. That is where you can play TIP. And you could play TLT. For TLT, it'd be a nice breakout above that 107. $107 would be a new high on the week, so an inside week breakout, and it would be one more week in a row where we just continue this march upwards. There is some resistance around that 110 area, so even if you do get the 107 breakout, you got a $3 head start, and you're going to hit some resistance again. That resistance is also a gap close. 110.22 closes the gap. That'll become a magnet if we get above 109. So, a nice $3 move. You could wait until we get above that 107, or you can just jump the gun and do her early. We're not far away from it now, as you can see. Just be careful. If we don't get the breakout, we're headed back to 105. Bitcoin is also up this morning. Overall, that's still a short, but nothing falls straight down and just continues to fall without getting a pullback. TAN is solar, which is up this morning. It's kind of bucking the system. Yesterday, we had nearly everything in energy getting that whack, but emerging markets, this is more of a China play. If you look at the names that are in the emerging markets, China dominates that. Pot stocks are continuing to see flows. We've seen that through the later half of 2022. It's not slowing down, it's starting to pick up actually. Qs are flat, S&P is flat, the indexes are flat. You start turning across the other direction. DBA, that's the commodities I mentioned earlier. Looks like we're going to get whacked to the downside on that one. Now it's pulling it back in. Now, ghost print, We'll have to let that one play out a little bit. XLE, XOP, USO, natural gas. And then expanded tech. Now, expanded tech doesn't normally get pre-market activity. So when you see it down or up, it's usually after hours action, not pre-market action. The EV space is doing good this morning. Most of those names are either up or flat. So Li Auto, Ride, XPEV, NEO, LCID. Ford and Tesla and General Motors are up, but my benchmark is 0.5%, and they don't meet that requirement, so I didn't mention them. But I mean, technically, they're up slightly. It's kind of a mixed bag in finance. BlackRock and Goldman Sachs are down nearly 1%, while at least JP Morgan is across my benchmark of 0.5%. And the other two are starting to wake up, Bank of America and Wells Fargo. Those three run together. So the fact that there's divergence says either JP Morgan's going to back up and join its peers lower, or these other two are going to wake up and join JP Morgan higher. So there's a play too. US dollar Canada, with this move down in energy that we're seeing, especially in crude, I should say, we'd expect Canada to go down. That'd be one worth watching. As a pair group, it's running right up into that 2-bar reversal, like that tweezer. So it's either going to be a really nice breakout, or we're going to get that rejection and come right back down. And to play it, if you don't want to play the pair, it's FXC. I don't think FXC is really liquid though. So inverse, you can see how it'll be a double bottom here versus that double top that we were just looking at. It'll run opposite of what the pair is doing. Yeah, see, it doesn't even have weekly options, which it doesn't mean we can't trade it. It's just that it's not going to be liquid. So it's not something you're going to want to day trade, certainly. On this, since it's so illiquid, you might be better off just trading the pair. That's what I got for you guys this morning. Be careful. There's something going on, or the lack of something this morning says the market's looking for an excuse. It doesn't have to be a downside move. I'm not some perma bear saying, you know, we're going to crash and burn. We could flash up just as easily as we could flash down. But there is absolutely something up with the market with this really tight range and this compressed market structure this morning. So it stands to reason that you want to be thinking about a big move, not a small move, right? If things break today, say we break below yesterday's low, it should get wild. A break below yesterday's low should put us right down into 39.40 fast. Now, we're not talking about, you know, heading back to all-time lows on the year. We're talking about getting down into, say, the midpoint of this of this candle here. Right. So 38.50, that's a level we've seen multiple times this year. If things were to start getting rowdy and we begin to really expand to the downside, 38.50 is well within our reach. Same thing for an upside play. If we did break upside today, all you'd want to focus on are those moving averages that we talked about, and then big major levels like 40.50, and then back up to 4,100. Not the little minor pivot points like gap close and yesterday's highs and lows. It'll be massive fire hose flow. See y'all tomorrow.